in favor of advances. Our market master of the day is with us, Taher Badshah, Chief Investment Officer, Equities at Invesco Mutual Fund. Taher, good to have you with us here. Thank you very much. On the buy side, Taher, how have you been looking at all these sell side reports urging you guys to buy? I mean, buy tactically, buy for a bounce. What's your own view?
Keep coming every now and then, but we have probably obviously we should take overall conditions into account. And I think from the last time that we spoke, there has been a one negative development from a global standpoint, which is around US, centered around US banks and the repercussions thereof. And then there is a good development over the weekend that, at least for some reason, the RBI has chosen to pause, and that takes away some bit of the multiple pressure on the market, pressure on multiples rather, on the market. I think we still are struggling with how to look at overall growth. Indicators seem to be suggesting some bit of a slowdown, at least as far as the economy is concerned, and that's kind of becoming a little more permeous, and at the same time it is kind of broadening out in different directions. So I think this result season for that therefore should hold a fair bit of cues for several sectors, be it IT or be it banks from the point of view of margins, or be it even consumption from the point of view of trends. So I think we're looking forward to some interesting outcomes of this season to be able to judge as to whether earnings can now hold up as we expect, or as the market expects.
Okay. Taher, I wanted your thoughts on what's happening with autos, because the big move this morning is coming into Tata Motors, 5.5% higher. But this is a stock that has frustrated investors in the past. Do you think the worst is over? Is there more upsides, and is there more valuation upside, importantly?
It's difficult to comment on an individual stock, but from whatever I see, I think what we've read about is a decent delivery as far as the month of March is concerned, and it has pepped up expectations. I think it has also been a little bit of a laggard as far as the overall set of auto stocks is concerned, particularly the OEM. So clearly some bit of that catching up coming by. Very difficult to call out overall conditions, especially as far as the overseas business is concerned. But I think there is probably reason to believe that the worst is behind.
All right. Hi, Taher. Good speaking to you after a while. Taher, the last time we chatted, you said some of these tech stocks are beginning to look interesting, and so is the case as well with some new age themes. What's your current positioning on the tech stocks? Because that's going to be the big trigger for the next 1 week or so. And the new age themes, have you got any of them now? Have you bought any of them?
On your second question first, we've not really added anything. We're just clinging on to whatever we have. Obviously, there's much of it is underperformed, and to that extent, it doesn't really seem right to kind of knock them off either. And probably, you could start seeing somewhat better tidings, especially if the market starts moving to appreciate a little more growth in not immediately, but probably in 3 or 4 quarters from now, when interest rates probably start to move in the other direction. With regard to your first question on IT, I think incrementally, we have 2 sectors, banking as well as financials, which are the mainstay of our market and constitute a very large component of the overall market, as we know. Between the 2 of them right now, and by and large, this matters in terms of portfolio allocation as well as performance outcomes. And I think between the 2 of them, our preference is slightly tilted in favor of technology, simply for the fact that they are unleveraged balance sheets and therefore a little easier to handle. Both of them are now somewhat embroiled as far as global circumstances are concerned, and to that extent, I think there is pressure on both. But between the 2 of them, I think given that IT has significantly underperformed, we're not necessarily thinking of it as a very strong growth recovery out there. It's going to be somewhat stable.
Okay, I think that connection froze. We'll just have Taher back with us in a couple of seconds. But Taher was saying that he is not expecting a strong growth recovery in IT services, but it's a space that he's constructive on. You know, 17,631 for now on the Nifty. I'll just have Taher back with us. Okay, I think Taher is back with us. Taher, sorry, just to continue on that point, we got the crux of what you're saying on IT. You know, Gartner put out a note and they put out their forecasts for overall IT spending for 23 and also 24. So it's quite interesting. For 2023, compared to what they were saying, overall IT spending worldwide will grow at. So in January, they said it'll be about 2.5%. They're now saying it should be about 5% plus growth. Overall IT spending. I mean, it's quite counterintuitive in that sense. We'll hear from IT companies, but what's your sense? How would you read this?
That 5% is probably looking similar to what they had forecasted for the previous year, and therefore it's heartening. Although, and it has been up as you said from their earlier guidance as well. So I think as of now, it at least if you go by their forecast, then it's more of the EU. But I would like to think that we need to get into specifics of the Indian IT services companies, and we'll hear a lot more as the quarter goes by and we get the quarterly results, and probably being the beginning of we get some new year guidance as well, so full year guidance as well. So I think it's like I said, I mean, much of the market probably from the point of view of quarterly results is going to be interesting, be it IT from the point of view of guidance, or be it consumption from the point of view of the slowdown, banks from the point of view of their margins, and industrials from the point of view of whether they're able to hold up and deliver to the promise. So I think it's going to be an interesting result season overall. But tech, I think initial estimates are that it's going to be an inline quarter. But as you all know, it rests a lot rests on the guidance which comes along.
Got that. Taher, how does this RBI pause sort of play? How do you read it as an equity investor? What's your own reading? Is it an acknowledgement that perhaps one needs to worry a little bit about growth as well, because you are worried about the growth slowdown broadening out a little bit, as you explained?
Yes, the way I think about it is that RBI is probably it's a relief as of now, and although it is not conclusive, the RBI itself has indicated that this is more of a guarded pause, and they can always come back. I think they're giving themselves time. It is a good move from the point of view of giving themselves time and giving the economy time as well, because you've seen almost 250 odd basis points of interest rate hikes, and let the impact of that permeate down onto the ground. It's already starting to permeate. So.
Okay, all right. We are having some issues with the video, but I think we got the gist of what you were trying to say. Thanks a lot, Taher, for joining us and speaking to CNBC TV 18. Well, the market